catching a good trade. 2 ways to do that in this session. So I'm Walter Peters, full-time trader, wrote the book Naked Forex. You may have heard of it. And we know that there are 3 things. Oh, by the way, before I forget, there's a class called the Naked Trading Class at, now wait for it, nakedtradingclass.com. You can get it for free, on-demand trading by clicking the link down below or above this video. Just go to nakedtradingclass.com. Now, I want to share with you the 3 things that we know, are responsible for profitable trading, consistent profitable trading. 1 is trading a system you believe in, that you know will make money, and that you is aligned with your beliefs about the markets. G'day, Kai. Good morning, good morning. It's like, what is it, like 8, almost 8 o'clock over there. Good morning. Number 2 is we want our risk management rules to help us achieve what we're trying to achieve, and to make sure that we do not run into the drawdowns that we're trying to avoid. And numero tres is we want to have our mindset on our execution and making sure that we execute what we're meant to do and not really worrying about outcome. I talked about that in many other videos, the mindset stuff. But what I want to talk about here is just more of a technical way to enter your trades. Yeah, 7:45, that's right. Yes, Cindy. Hey, Sashin, welcome to see. Hey, Sashin, I posted in the forum. I actually looked at most of those pairs you were looking at, so you can check out my video in the forum. Hopefully you've seen that. Welcome. Okay, so let's talk about what you can do here. Good morning, Samir. They're all here. Again, if you want the on-demand class, it's nakedtradingclass.com. Nakedtradingclass.com. You can check it out for free. All right. Now, what I want to do here is share my screen. And when I do this, it's going to get a bit funky for a second, and then it'll be all fine. All right. Now, this is a pair that I'm currently looking to take a trade on. If you follow my trades in the forum at Naked Forex now, you know about this, but if not, that's okay. Now, what we're going to talk about here is the Swissy. Now, let's say that I decide I want to buy the Swissy, which I do right now as I see this chart. So there's a couple of things I can do. Number 1, I could decide, you know what? I'm bullish the Swissy. It's in a bullish trend. And so every time it goes down, I'll look to buy. That would be method number 1. So every time the Swissy were to come down to say, like, you know, 101.69 or lower, I would go ahead, take a buy trade there, maybe have a 50 pip stop or something like that. Now, every time that, so that's one method. And the other method is I could say, you know what? If this here Swissy gets above this kangaroo tail right here, I'm going to buy as well. So in other words, if it breaks out to the upside, I'm going to take a buy above this high of 102.36. I'll buy at 102.41 or something like that, right? So that would be another way to do it, and that would be a breakout trade. And those are different styles of entry, but they're both valid, obviously. It just depends on your flavor. Now, what if you thought, like I do, that this is such a beautiful looking trade that you don't want to miss out on it, and so you want to make sure that you get in, but you just don't know where to get in? Should I get in on a bounce down at the bottom of this box, or should I get in on the breakout up above that high up there? Well, what if I were to do both? And so what this is it's the old fancy schmancy OCO order that you may have heard of. It stands for one cancels other. Okay, so if you don't have that, you can get a plugin for that. You can Google. There's plenty. A lot of platforms actually have OCO orders, but you can get an MT4 plugin or whatever. The point is that I put 2 orders in, and whichever one is triggered first, it cancels the other. So if the Swissy decides to come down here and clip me in at 101.69, then it'll cancel my buy stop up here at 102.42. You see what I'm saying? So that either way, it makes sense, and I save myself 80 pips if I get in down here, assuming I don't get stopped out. Or if it never really comes back down here and stabs 101.69 like it did over here on this candle, then guess what? I will eventually get triggered up here as it breaks out and as the trend continues. So this is a really useful way for you to use orders to basically allow you to get into the best trade. You could also split it up and do half and half, but that's assuming that it's going to retrace. So you may never get that, right? So you have to be careful there. One cancels other, or order cancel other, something like that. It's OCO order. You just Google OCO and MT4 plugin. If you a lot of platforms, like I know Gains platform used to have it. That was about 14 years ago. But yeah, a lot of platforms have it already built in. It depends on what the platform you use. What if you told me that this market is all manipulated, mate? What is your answer to this? That's funny. Well, I mean, certainly it doesn't actually take much to move the Forex market. There was a study by one of the co-founders of Awanda. He was so if you know FX Street, they used to have this annual conference, and I was invited to go to the last one. That was an in-person conference. It was, I don't know when it was, 2013 maybe was the last one they did. Anyway, and one of the other speakers there was this guy, Richard, who had co-founded Awanda. And he had tick data going back decades, right? And what he showed us, he was a very interesting guy, very different to everyone else, like really kind of cool guy that I got to know him. And as we went across, like, so the way it works is you do your presentation on day one, and then on day two, everyone gets to sit at your table and you talk about and take some trades, and then you move, and then, so you get to sit with all the speakers. It's a really cool conference, actually. If I do another conference like we did in London, we'll do it like that, where everyone gets to interact with all the presenters and stuff. It's pretty cool. But anyway, the point is, he showed that you can move the markets. It takes a few. It doesn't take a lot of volume to move the Forex market, but it doesn't last that long. And so if you're worried about the market being manipulated, here's my question for you is, can you trade a manipulated market? See, there are dozens and dozens, hundreds of traders out there who currently make a living, and they will trading the markets, and they will tell you that it doesn't matter which direction the market goes. They don't care which direction the market goes, and they don't predict the way that the market goes. They simply trade the market when it goes. So when I first took a currency trading class, when I read the ad in the back of the LA Times, this was back in 2001, right before September 11th. This would have been August 2001 when I took this course. There was a guy in the course, and he was definitely not the smartest guy in the course. And he ended up being the best trader of the lot. And you know why he was the best trader? Because he bought when the market went up and he sold when the market went down. He didn't predict where the market was going to go. He just waited for it to go, and then he would follow it. So you don't need to know, like, you don't have to have friends who are pulling the puppets, or you don't have to be friends with the bankers or whatever. You know what I mean? All you have to do is find a strategy that works, that you believe in, that you've back tested, and set your risk management rules up so that you achieve your goals. And then you've got to get your mindset right. So you're focusing on executing that strategy and forgetting about everything else. That's all that matters. It doesn't matter who's manipulating the markets or whatever, because the markets will go up and they will go down. And if you can ride the ups and ride the downs, that's all you need to know. Remember, in Forex, we're trading the retail world, which is like the parallel world, which is interesting because we don't actually make money from the interbank market. Where we make money from are the other traders. The other traders, most of the traders, they donate their money to the broker, right? In retail Forex. So all you have to do is take some of the money from the other retail traders. And I don't feel bad about that because I lost a lot of money learning how to trade for over 4 years. And also, these traders will either burn out and go on to something else, like buying and flipping houses or whatever, or Bitcoin investing or selling Mary Kay products or whatever, and they'll stop trading. They'll go into multi-level marketing or whatever, selling stuff on Amazon, whatever people do nowadays. I don't know what the cool thing is. So you don't have to feel bad about that. That's just part of the game, right? When we trade and help teach lessons to other traders. And the big lessons are that most of the other traders out there who are losing money consistently, they take really small profits and they take really big losses, right? And so that's the big one. I have a friend, actually, he, interestingly enough, he set up a fund. He had his platform programmed in China, a custom platform in China, where he would ask people to, I mean, he's more of an acquaintance. He wasn't really a friend. I don't talk to him anymore, but it was really interesting because he wanted people to qualify for his fund. And what he did was he put them on demo account, but he actually connected a real live account to their demo. And so they thought they were trying to qualify for the fund, but they were actually trading real money. The only thing was it reversed the trades. So every time they bought the euro in his accounts, it would sell and so forth. And I said to him, I said, hey, man, that's crazy. Aren't you worried you're going to get a good trader and he's going to, like, hit you with some losses? He goes, yeah, it happens occasionally. And then we sign him on and all that. He said, but by and large, the vast majority of traders let their losers run and they cut their winners short. And if you look at the study from Daily FX, you guys know, you can Google Daily FX and 43 million trades and it'll come up. They looked at 43 million trades. This is what FXCM data from the old FXCM broker. And basically, FXCM had found that most traders had a better than 50% win rate, but that most traders had losers much bigger than the winner. So if they have a 43 pip winner on average, they might have a 75 pip loser. So with the 56% win rate, that's a losing strategy. And I use that data. So when I see everyone, like, for example, right now, I showed you the chart, right? When I showed you my Swissy, I'll show you again. So on the Swissy here, if you look at the numbers, just Google open position ratios for the Swissy. Most of the traders on the Swissy, they're selling right now. Like over 70% of the traders are selling this market. So every time the market makes a move, they think that that's the top. And they still think that this is the top. And I'm here to tell you, the chances are, overwhelming chances are that this is not the top of the Swissy market, that instead what's happening here is it's just consolidating and it's eventually going to move higher. So again, you can go to nakedtradingclass.com if this stuff resonates with you and take the free on-demand class all about building up a small account quickly. I use Forex Tester to backtest. Is there any way to get a part of Naked Forex now? Yes, you can ask at fxjake.com. Ask at fxjake.com and ask Jez nicely. Say, hey, Jez, let me in. My English is poor in your course. No, I'm sorry, it's not translated. I'm really sorry. What do you think about true ECNs? Most true ECNs, and one of the reasons why, so brokers will ask me occasionally, I've been approached several times, and they'll say, hey, we want you to be our guy, right? You go to the broker and you do webinars or whatever for them. And I always say no, or they'll ask you, hey, feed us some clients and we'll pay you money every time they trade. You can make a lot of money doing that. A lot of people do that. Like a lot of gurus, they'll feed clients to the broker, and they'll make money on every trade that the client makes, right? Or they'll get a fee for every client that signs up with a live account. I don't do that. And here's one of the reasons why I don't do that, so I can tell you things like this. And this is true. A lot of ECM brokers, what they do, not naming names, is they'll set up a separate company that's kind of the clearinghouse. So they say, hey, we're ECN. We take our trades and we pass them on, right? We're a true ECN. What they don't tell you is they own the clearing company too. So it's kind of like ECN in name only, right? So, I mean, you just have to be careful. You just have to be careful. It's not demand and supply, Walter. Let's get straight. Yeah, I know very little about that. I was talking to a group of traders in Queensland here in Australia, and they were asking me about that. It sounds like it's the opposite of support and resistance the way that I trade. So I don't know. The way that I trade is in the book Naked Forex, or you can just come to these sessions and we'll talk about it. I'm trading Bitcoin, but it seems like Forex. What I meant was the Bitcoin investors. So if you go back, I have a couple of podcasts that are free you guys can listen to. Truth About FX with Hugh Kimura. Hugh Kimura is awesome. He's got Trading Heroes. You should check him out. And we talked about this back when Bitcoin was peaking. Hugh asked me, and I said, dude, it's a bubble. It's going to pop. Doesn't mean it's not going to go to like $100,000 a Bitcoin. It may do that. And in fact, I think it's more likely to do that than not. It's more likely to go to 40, 50, 60, 100,000. But I said that the phase that we were in was in a bubble, and I said it's going to collapse. All my friends here were getting into it and everything. I said, dude, just be careful. You know, you're buying Bitcoin at 18, 17, 15 grand. I still think it has room to go lower. I know everyone's saying it's broken out and gone higher, but you know, it's at 5,000 or 6,000, whatever it is now. I still think it probably needs to bottom out around 1,900. But that's just looking at the charts. That's just my male intuition on that one. Naked. If you go to fxjake.com/tester, you can get Forex Tester for a discount. They will pay me like $30 if you sign up there. How do you backtest? So that's how you backtest. Canada. We had so many awesome traders at our London event, Rodell, from Canada. Canada was well represented at our London conference, really well represented. Why do you teach for little money when you can fill bags with money? Because I learn more from my students. Some of the best ideas I've learned in terms of trading have come from working with students. They keep you sharp. I could sit here all day and like watch YouTube videos and just surf and, you know, hang out, or I can talk to traders. I can learn from them. I can help them. When I learned how to trade, when I say learned loosely, there was one book about Forex trading in 2000, and the year 2000, it sucked. My friend met the author and told me that he was a scammer. And I spent over 4 years, 4.25 years, but who's counting, losing money, wishing that someone could teach me how to trade. So I know what it's like to have your cognitive biases send you the wrong way. The good news is all the stuff that, you know, in our head that messes us up as traders, that actually helps us every day in life. They're really great. They're called mental shortcuts, like they're called heuristics. These cognitive biases, we'll talk about them in another video. But, you know, that stuff's great for everyday living. Unfortunately, for traders, it doesn't work. Kind of doesn't help us very well. Doesn't do much for us. For example, taking your wins when they're there. That makes a lot of sense if you're in the jungle and you're like, oh, here's some food. Like, I better grab these bananas, you know, because we just ran into a banana tree in the jungle here. That makes sense, right? Grab the bananas while you can. But in trading, you grab the pips, you grab the profit while you can. Unfortunately, focusing on that is often a way to lose over the long haul. Retailer shorts increasing last 24 hours. Get ready to go long. Yeah, I agree. It is definitely a good time to buy the USD Swissy, or getting close anyway. Tell us secrets in a candlestick. How do we use it as a professional? Best book to read the charts in the shorter time frames. I don't really know. I mean, I use the same methods. I've heard that there are traders, they tell me, they email me once in a while and say, I'm using your systems on lower time frames. The thing about lower time frames is you activate your reptilian brain, and that's your reward circuit. You have to be careful. You can really get into trouble when you do that. Just be careful, guys. When you're trading lower time frames, you can get into a dopamine addiction, and it's hard to break that cycle. So if you trade the higher time frames like I do, like the 12-hour, 8-hour, or whatever, it's a little bit easier to stay on top of it. I binge read Naked Forex. Thanks, Adam. I hope it helps. I suggest any newbie trade on small account rather than backtest, because once in real account, different mindset. Yeah, we talked about that in another video, Eminem. What I would recommend is that you focus on your execution. And the way that you do that is you rate your execution, not your profits. So profits and losses don't matter. Execution does. All right, guys, if you click the link below or whatever, you can get into the Naked Trading class. That's nakedtradingclass.com. Show you 3 ways to grow an account. I hope that helps, and we'll see you in another video. See ya. Bye.